guys, good morning. Welcome back to the Metaverse Illuminated. We're going to talk a little bit today about Bitcoin, talk about the crypto markets, what's moving them up, maybe what might move them down again in the future, and things to be aware of. I've written a few pieces lately on being careful right now as we are in the midst of what looks like maybe a relief rally in the middle of a bear movement. I do still think that we're in the context of moving upward. As you can see here, I've got the all-time Bitcoin chart in front of you. And this is just looking at the trajectory that it's been on, which if you can look at this, it looks like a hill that we're climbing up, right? So long-term, the trajectory is still up. We do have some points where we've dropped down pretty significantly. As you can see in 2020, we got down to Bitcoin oh gosh, back below 5,000, right? It was around 3,000 for a single Bitcoin. We've had some nice peaks as of late, but and I've done some previous articles on this and commentary that we've run up pretty significantly since the lows in March 2022. And we're pretty much overdue, long overdue, for a pretty significant pullback. And in the previous pullbacks from the peaks in Bitcoin, we've seen 80%, 90% retracements. So it wouldn't be unheard of to think that we might go down 70, 75% from the highs, which would bring us back down to about 20,000 in Bitcoin. Now, not sure that we'll exactly get back down to 20,000, but if we just take a look here at some retracement levels, and I'll get rid of this chart for you. So let's look at our Fibonacci retracements. And if we went from the top here down to our most recent local bottom this way, and let's extend these out. So you can see here on the Fibonacci retracements that we're right around 38,000 at this half movement. And then you want to pay attention to this 236 line down here. This is an important one when you're looking at Fibonacci retracements from the high. And this takes us back down to about that 20,000 mark. Now, we'll see if we do get back down here or not, or if we come back down maybe a little bit closer to this 382 line. We have retested it back here in May 21, June 21, and July 21. We had kind of a triple test down here. So we might not get all the way back down to this level, but it wouldn't shock me if we didn't get back down here to 33,000. And then we'll see kind of what that picture looks like. So what's driving this, right? What's driving these potential retracements? If we want to look at a little bit of a different time frame here, we can get in a little bit closer. And let's just zoom this in. So now if we're looking at a little bit of a different time frame, you can see here, this is the beginning of 2022. We were up here around 52,000 heading into the end of the year. We had a pretty significant pullback down here to 33,000-ish, and we've come back up. To me, where we're at right now, this looks more like a relief rally. So if we just take a little bit of the info box here, and look at how far we've come back up. That was a 40% gain from the lows down here in end of January up to, almost 50,000, not quite getting all the way back up to 50,000. But that's a 40% climb we've had right here. Now, I wouldn't expect that we're going to see that we move all the way back up here to these highs, but we're certainly in these patches where we have these relief rallies, right? And so this little bit of relief rally right here, followed by some consolidation and pushing back up again. Now, why are we doing this? Why have we pulled back? And why do I think that we could see an even further retracement back down here? And as I said before, I mean, shoot, I think 20,000 is still within the ballpark. So if we look at our info box from where we're at right now, getting us down to, let's go to 20,000. That would be a 54% drop from where we're at today. If we were to go down to that 30,000 mark, which was one of our Fibonacci lines right around 30,000, that's still a 30% retracement. Or even pulling back down here, that's another 25% or so to get back to 33,000 in Bitcoin. So the reason I'm bringing this up is that there is potentially more pain out there, and just be careful about getting sucked back in. If you've been on the sideline and you're starting to buy back in because you think it's heading back up, it certainly could, but to get back up here to the peaks is also a pretty good way away. And the macroeconomic picture right now is not favorable. So let me show you something here. Okay, so let me explain a little bit about what Quad 4 is and how this works. So when we're looking at the quads here, you've got essentially two main factors that are going to dictate what quadrant we're going to be in: growth and inflation. So on your x-axis, on the horizontal axis there, you've got growth. On the y-axis, or vertical axis, you've got inflation. So if we're heading towards the top of the chart, inflation is moving up. If we're on the bottom half of the chart, inflation is decelerating. And likewise, if we're on the left-hand side of the chart, we've got growth decelerating. And on the right-hand side of the chart, we've got growth accelerating. Now, the good news here is that in 3 out of 4 of these quadrants, these are going to be good environments for Bitcoin. Now, some are better than others. When we've got increasing growth, increasing inflation, that's the best environment for Bitcoin. And that's actually where we just came out of. That's called Quad 2 environment. And in that environment, Bitcoin tends to do very well. That's where we saw the highs of around, over 60,000 in Bitcoin. Well, that yellow circle is where we're heading. And we're coming off some really strong year-over-year numbers. And when you're looking at the market and the way it acts, it's always interested in relative data. So data is neither good nor bad. It's just relative to the previous data that you're looking at. That could be last quarter or last year. And a lot of the time what happens is the market is looking at year over year and pricing in, okay, are we in better shape or worse shape year over year? Well, year over year, if you think back to the second quarter of 2020, that was when we were coming off the real low period there in March of 2020. And we had massive acceleration heading into the second quarter as more money was pumped in. There was more stimulus. There's a lot more, packages to get people back to work, put money in their pockets, get them to spend again. And so, at that point, we're actually coming out and looking pretty strong from a growth and acceleration perspective. So when we come into the second quarter here in 2022, that's the relative terms that we're going to be looking at, the relative data. And from that context, growth is going to be significantly less. And when we look at inflation, well, inflation, especially quarter over quarter, we've rolled over. We kind of peaked with inflation in the past couple months here. If you're listening to CNBC and other news outlets, they're talking about how inflation is out of control. Well, yeah, but a lot of the stuff they're talking about is lagging indicators. Anybody who's been looking at this has seen that inflation has been happening for a number of months. And what's going to happen now is it's going to roll over. So we've peaked from an inflation perspective. So now we're going to have decelerating inflation. So we're on the left-hand side or on the bottom of the chart there. And we're going to have deceleration in growth. And so we're on the bottom left-hand quadrant, which is called Quad 4. In a Quad 4 scenario, that's where you've got some really ugly stuff going on. So let me show you here. If you're looking at Quad 4, and there's a lot going on in this chart, but the big red number at the top, negative $1.3 trillion in federal spending, is really the takeaway here. So when you look at it year over year and you compare spending in the second quarter of 2021 to the second quarter of 2022, we're going to be at a $1.3 trillion spending gap. So we're going to spend less than we did in 2021. Well, that equates to about a 6% drop in GDP. And you can tell that that's probably not going to be a good environment. So GDP numbers are going to be way behind what they were. We're already seeing companies that if they're not having gangbuster numbers for for the fourth quarter of 2021, they're getting punished. And so all of this is leading up and talking about, essentially where we're at right now with Bitcoin and looking at where it could be potentially headed. So again, if we look at some of our retracement numbers and we're coming down here from the tops around almost 70,000 to get back down to this 33,000 mark, that's a 52% drawdown from the top. If we would come down to about 30,000, 56%. If we get down to those $20,000 levels, then you're talking more in that 70, 75% almost range of retracement. And in some of my previous videos you guys have seen, from peak to trough, it's pretty common to look at 70, 80, 90% retracement for Bitcoin. So could this time be different? For sure, of course. But we did have a drawdown already. That was about 50%. Maybe that's the max. Maybe, that's all we get down to. I still don't see how we don't at least retest this level. So coming out from where we're at today, back down to those levels, that's still a 25% retracement. So just be careful out there. Don't get sucked into these relief rallies. Certainly if you're trading around them, they're good opportunities to trade higher and capture some of that growth. But just be careful because the wind can get taken out of those sails very quickly. Thanks for stopping by the Metaverse Illuminated. Stay tuned for more content in the future. Have a great day.